I expect positive surprises from essentially the whole pack, but the interesting thing about that, Tyler, is the whisper numbers are already indicating that they're going to have substantial beats, and that's what we've seen with the rest of the S&P 500 leading into these companies' prints. So if they beat the numbers, which they will, top and bottom line, probably give pretty rosy growth forecast as well, will it be enough? Now, I think particularly Facebook and Google, with the reopening of the economy and the big boost that they'll see in digital advertising, there is plenty of room there on the upside. I think Amazon is fine as well. A lot of room on the upside there. Netflix has already reported, and they're in the penalty box until further notice. The one that I'm worried that's reporting this week is Apple. And I don't have a negative call at all on what they're going to say about the current quarter or even the next one. But here's the rub. So Apple was about ready to start its next fiscal year. And after exploding coming out of COVID, with earnings per share growth of 60% and revenue growth of 30%, if you believe the Wall Street consensus, and that's a pretty big sample size, because there's over 40 analysts that publish on that company, they're expecting for this next fiscal year, which starts on October 1st, that earnings per share is only going to grow 3% and revenue is going to grow 4%. Those are very pedestrian numbers that unless this company over the next couple of quarters has monster revenue and EPS beats, which caused Wall Street analysts to greatly increase their numbers, this stock is very expensive for a company that should slow its growth rate.
Correct me if I'm wrong, Paul, but I seem to remember that Apple is a little bit famous / notorious for sandbagging those forward estimates. In other words, they lower the bar so that they can surprise dramatically to the upside. Right or wrong?
You're right, but what I've seen following this company ever since its beginnings is the discrepancy now between the Wall Street consensus and what they need to do to justify a 30 times out-year PE is a gap that I have not seen in a long, long time, Tyler. We'll see what happens, but they're really going to have to show upside, not only for this quarter, but for the next.
Yeah.
A lot of excitement about the iPhone 13. It better be a huge success.
In other words, they may lowball, but this time they're lowballing so much that, boy, they've got to make up a large gap to justify.
Shepard Smith here. Thanks for watching CNBC on YouTube.